Good evening, ladies and gentlemen. It is now evening in the southern United States of America. A few have asked for education. I don't know exactly what does education mean. What we want to do is we want to look inside the currency price. Inside. Nobody ever looks inside. Nobody understands what is inside the currency price. Everybody gives you these parameters from outside looking in. Let me show you a few things. All right, first we want to go to the euro. Note, we spoke here about noise ratios. Notice here the noise ratio. We're looking at the euro. We are looking at the euro at the current price, 2060. The current price is good enough. Okay, what is the noise ratio saying? First, you have to understand the currency price trades. It goes up, it goes down. But the currency price trades, it begins here. Here's your range. Here is your high, here is a low. You can look at this as two different averages. Inside of your high and low, inside of your range is the currency price trading. What happens, and the parameters, notice here, are pretty large, okay? When the currency price trades in shorter ranges, then your parameters compress. Now your shorter ranges again, your parameters compress. They compress. What happens? It drives up the noise ratio. What are you saying really with a noise ratio? You get this, by the way, from engineering, from the field of engineering. Noise, also called a signal or signal to noise. What we're saying is the euro price traded in smaller and smaller and smaller ranges. In other words, the frequency is what drove the noise ratio. When the noise ratio is this high, note your variation at 0.3. This is too low. The noise ratio is too high. The variation is too low. The price has a severe frequency problem. In other words, your frequency right now is running like this. Here's your euro trading to your highs and lows. Very, very short. It began here inside larger parameters where it was normal, but it compressed. What's going to happen? The breakout. When you speak about a breakout, you get this from the noise ratio. It's telling you that the price cannot stay in this low range, in this low frequency, inside the compressed ranges. It's going to break out. How do you find the noise ratio? You've got to get inside the price to understand these things. Nobody goes inside the price. We go inside the price. But then again, we are miles and miles and miles advanced from the trading crowds today. Hate to say that, but how do you find a noise ratio? First, you take your standard deviation, divide it by your average. Then take your average, divide it by your standard deviation. You have now bounded your ranges here. One side gives you your coefficient of variation. The other side gives you your noise ratio. You need to see inside the price what's going on, okay? And as I mentioned during the beginning of the week, 11 of 28 pairs have problems right here in this area. The signal is too high. That's what they're really saying. The signal is too high. The variation is too low. What's going to happen? This side of the noise will transfer to the coefficient of variation. You're going to see it's got to vary. Your price has got to move. It's got to vary. Okay, moving along. What's going to get euro out of this problem? I really don't know. Let's look at euro at 25. Not bad. Not bad. Notice what are you seeing here? Look, we're out of the red. We're out of the problem at a euro 25. How about a 23 euro? I'm testing this as I go along. 2, 3, 4. Let's call it 2, 3, 4, 7, just for the heck of it. Where are we now? Well, we still got a problem. However, the problem is eliminating slowly. How about on the downside? Let's go to an 1863. I'm making this up as I go along. What do we got at an 1863? Oh boy. Higher. Which is telling you what? Euro's going higher. I got 2 minutes. Give me a break. All right, we're on. Let's get to a normal euro. There were a couple of questions I wanted to answer. I'm running out of time. Here's your euro averages. 5-day to 253-day. Okay? Notice your averages. Here's your targets. For my friend that says your entries are good but not sure about your targets, here's your targets down here. 1941, 1998, 1961 at the 253-day average. Notice the euro price is going down here. Now let's look at the chart of the same averages. Here, look. Here's a 1-hour chart of euro. Here, your lowest average is right here at 2018. That would be the 50-day. The averages are off, okay? You can't use these indicators because they are off. Don't use the charts. Get rid of this stuff, okay? It does not work. They are off, okay? This is why the trading crowds today, they're all off. They're all off. They don't know what they're talking. They don't know what they're doing. Where do you get your average? Where do you get your information from? You must get your information from fixed prices. This is standard FX, man. You got to know about the fixed prices. They're released every day. I tell you where I go. Where are you? All right, come on. Here you go. This is the greatest site in all of FX. FX Top. They've got everything you need. Here, let's see. Let's click something. Click a day. How about we go to 4? I wasn't prepared for this, and I didn't realize I'm running out of time. Let's go to 4. What month are we in? We're in May. Let's go to 2021, and let's click and see what happens here. Oh, this is Euro. This is USD Euro. Give me a break, man. What the hell? What the heck? Now you can retranslate this thing. Click here to reverse exchange rates. All right, we want to go to Euro USD. You see right up here, what do we got? We got a Euro at 2060. Okay, we got a Euro 2060 for today. It gives you the opposite, USD Euro. That was at 8291. Here's your chart. The main point is you need fixed prices. Let's go back to my averages for the euro. My averages are based strictly on fixed prices, daily fixed prices. By the way, you see this system? I talk about the system. You can have it. Go to the ECB and download the system, okay? That's all you got to do. you have somebody program whatever it is that you want to program, and you're in business, okay? I like statistics and math. I think it's perfect. And this is why I use statistics and math. It's simple. It's easy. It's very, very simple and easy. Um, and my stuff is already computated for me. All I got to do is enter a price. I know exactly what time of day it is at any time of day, on any weekday, weekend. It doesn't matter. Any given month. And it allows me the ability to test prices as we did for this noise ratio. What was I saying here? Oh, back to the averages. Back to the averages. You see, these are true averages. To my friend, where's your target? Well, you got a euro at 260. Here's your euro right now here. It's trading between the 5 and 10 day average from 2033 to 2065. Where is it going? Well, 1941 is a good target at the 50-day average. Notice what we have here. 7 averages. 7. What would be the middle average? 50-day. 50-day. It's a 50-day average within the 7 averages here is the same thing as saying the 50-day average is a median price. Median. Remember that currency analyst that was with Brother Dale that time telling I'm going to start exploring trading with a median line. I'm like, I couldn't believe my ears. I could not believe my ears. A currency analyst. Give me. All right, moving along. Okay, so the higher you go in your averages, the less you're going to see movements. Your 5-day average. What is a 5-day average? It's really, it's anywhere from a 2-day to a 5-day average. On Monday, a 5-day average is a 2-day average. On Tuesday, it is a 3-day average. On Wednesday, it remains a 3-day average. Thursday, it is a 4-day average. Friday is a full 5-day average, okay? This is not exponential growth. Don't look at this as exponential. Don't even think exponential or anything related to exponential. It is just the way your average works. These are simple averages, okay? Moving along now. Your 10-day, I forgot what your 10-day average was. Let's go to your 50-day. This is vitally important because it is the middle of the distribution, okay? The middle of the distribution. Your 50-day average, what is it really? It's anywhere from a 36 to a 50-day average, depending on the time of year, okay? You begin in January and you count 36, you count to 50 days, and when your 50 days hits, then the average reverts back to 36. It's got to start again. Your average then reverts to a 36-day. It builds to a 50-day. And then when it gets to the 50-day, it reverts back to the 36, and this never ends, okay? However, a 50-day average as your middle average, as your median average, is a big, giant break, okay? If your 50-day average, if 1941 breaks lower, well, then you're going lower. However, these averages are problems because they're higher than 1941. This is what it means that the euro is trading in compressed ranges. The averages are screwed up, okay? They're not correct. And it's causing problems, okay? This is why the euro is trading in small ranges. It doesn't know where to go. The averages have compressed. I mean, the averages have all completely married to the price. But normally what you would see under normal circumstances is a break of a 50-day average. You would see lower averages here. So if 1941 broke lower, then what you would see is, I don't know what this average could be next. It could be 1880, let's call it. Then the next average could be, I don't know, 1840. Then the next average would be 17, let's say. Those would be your targets. Where would be your entry points? Somewhere up here. Note, your price is under normal circumstances, your price is going to stay within the bounds of the 5 and the 253-day average. A price down here at the 200, 253 day, you're long. You're long to travel up here to the 5 and 10-day average. Your price at a 5 and 10-day average, you're short to target your lower prices here upon the break of the 50-day. This 50-day average is a great average. It's the middle of the distribution. It's a fantastic average to know and to follow. However, follow it correctly. What you're seeing from these websites, from all these traders, from all these social sites, everything's wrong. 90% of everything out there is absolutely wrong. Your targets are wrong. Entries are wrong. Must break this level. Yeah, right. Now I look and I see, well, there's nothing at that. What are they talking about? There's nothing at the level that you have a price path. Along a price path. Let's say you're going from, let's say the euro from 19 to 18, 100 points, okay? What do you think? There's nothing in between? I mean, there are averages, there are vital points in between. Not all exchange rates are vital. There's a lot of minor points that are meaningless. I got to start wrapping this up. I'm running out of time here. What else can I say? My friend CHFJPY, let's look at this real quick. When I said 18s was not supported for the Swiss yen, what am I saying? Well, let's take a look here. Look, 17, here's an average, a 78-day average, 17. Here's an 8, there's an 18, rare day here. But let's look further down. Okay, let's look at your averages moving up. 14, 12, 12, 12, 12, 14s. Here, now we begin 10s. Let's look at the bottom. Here we are, 103s, 103s, 109, 104s. What are you saying here? The averages are not supporting Swiss yen to move higher, okay? You know that Swiss yen is at the top because there are no averages. You are short Swiss yen. Again, we're targeting 14. I just noticed too, I mentioned 14s in my post, but I also see a 14 average here. I have another way of, when I say long-term targets, those are usually a 3 to 6 month view of the future of prices. I have another way of factoring averages, and I have a very different way of factoring the averages. I'm running out of time. What else can I say? Oh, wait a minute. No. There's something I want to get to. Here, we talk about correlations. I want to get to correlations. Correlations. This is EuroCAD. This is Euro USD. What are we saying here? Look at this. Your correlation is minus 46. You're saying the Euro USD has no association to EuroCAD, okay? It is a negative association. Now, if we go to USD CAD, here, this is EuroCAD, USD CAD. What are we saying here? Now we have a 98 correlation. 98% Euro CAD and USD CAD are related. 98%. They are married. It is the same pair, the same trade. Notice CAD went down this week and Euro CAD followed along. US CAD went up, Euro CAD followed up. What we're saying here is, now you also see your R squared. Moving along, there was something else I wanted to show you in here. Here's your relationship here. If you go to VassarStats.com, this is a public it's a public statistics book, and the guy's got all kinds of calculators, man. What you're looking at here, for the majority of this is you're looking at regression. Everything here is regression lines. It's another computation. It's a really, really simple, and it's really valuable, and it's highly accurate. You enter your moving averages, your correct moving averages. Here, EuroCAD, Euro. All I did was enter my averages. This is very short-term view now, okay? You really want to do this to be correct and get your correlations, you want to do it on a monthly basis. You want to take monthly averages and enter them for each pair. What you're saying is, what is the association, okay? EuroCAD and USD CAD are the same pair, doing the same thing. They both move up, they both move down, same thing, moving along. Okay, so what we're saying is this. The relationship, you got X and Y, EuroCAD, whatever's the X, whatever's the Y. Forget all of that. You don't need it. You don't need to know all of that unless you're into figuring and factoring and understanding regression. But here's the relationship here. These pairs are married. EuroCAD and USD CAD are married, okay? What's going to happen? Here's your question. What's going to happen? See this above? You're going to have an explosion. I don't know. You're going to see a change, okay? Because the relationship is correlation. Minus 1.00 plus 1.00, okay? What does this mean? This is this phantom number called 98%, called 50%, called 40%. It's this phantom number that drives and moves in between currency prices, okay? You got to know this number. It's very important to know this number. You will find double and triple trades. You might find 4 and 5 trades at the same time if you understand the correlation relationships. Now we're at 98%, as I mentioned. What's going to happen? The relationship is going to break. How do you know the relationship is going to break? If you want to get technical on this stuff, if you want to get a little more technical, you can take the confidence intervals of Rao, okay? You don't need all that. What you're saying, look at this. Your upper limit is at 99.7. Your upper limit here is 99.8. It's reached the peak, okay? The correlation has now reached the peak. Confidence intervals told me it has reached the peak. It is going down here. It is going to 87%, then it's going to 77%, which means that EuroCAD will move from USD CAD back to Euro USD. That's the rightful owner. Notice Euro USD, Euro CAD. It's Euro, okay? The correct distribution of your exchange rates with everything EUR and Euro USD should own all their cross pairs on a correlation basis. Currently, Euro does not. USD CAD has no business to own Euro CAD, okay? Just like Euro USD JPY has no business to own Euro JPY. What? Oh. All right. Listen, if there's other things that I can do, when you mention education, be specific. What do you guys want to know? What do you need to know? I'll be glad to help you out, okay? I thought today might be a good way, a good couple of things that will get you started, will help you understand. Notice we're looking inside the currency price, not this outside stuff like everyone else does. That's why they're all wrong. They're looking in all the wrong places. I'm out of time. Thank you, everybody. Thank you, ladies and gentlemen. Thank you, friends, followers, subscribers. Brian Twomey, the blog, InsideTheCurrencyMarket.com, btwomey.com. Contact Brian at btwomey.com. Questions, concerns, anything, feel free anytime. Thank you very much, everybody.